So today we're going to go ahead and be talking about the Fed and what it means when they go ahead and raise rates or they cut rates, and what it means for the economy and how it impacts your day-to-day life. Alright guys, so we're going to go ahead and jump right in here. So we're going to go ahead and talk about the Federal Reserve and how when they go ahead and change rates, how it affects you in your day-to-day life in the economy. So let's go ahead and jump right in. I'm going to go ahead and draw it up here. So pretty much here you have the Federal Reserve, and what the Federal Reserve is it's a federal entity that goes ahead and determines the interest rates for loans and things like that. So they regulate the cash flow money, and they go ahead and regulate the economy. So that's what the actual Federal Reserve is, and then you have your banks. So this could be like Wells Fargo, Bank of America, etc. Right? So Chase, you get the point. Your regular bank where you have, your checking account or whatever, right? And then you have you, so right, so the consumer, or consumer. So what happens is then what happened here today is that the actual Federal Reserve went into a meeting and they went ahead and they cut the rates for interest. And so what that means is that, and the way that this works is that the banks like we talked about, Wells Fargo, Bank of America, etc., they're required to keep so much money on reserve every night with the federal government. So there's a certain amount of money, and I don't quote me, I don't remember how much exactly it is. They have to keep so much money on reserve. So basically, the reason they have to do this is so that the banks do not lend out all their money. So they have so much money on deposit, and they don't lend out all their money. They actually have some cash reserves. So banks are required to go ahead and give a certain amount to have that on deposit every night. And then if they don't have it, then the banks that don't have the actual amount that is determined by the Federal Reserve, then they're able to go ahead and borrow from the banks that had more money than that actual requirement, and they go ahead and pay an interest rate on it. So what happens is for the banks that go ahead and make this threshold, the amount of money that they have to have on reserve every night, they earn interest. So they earn interest on this, and then today these interest rates, I believe it's about like 1.88% right now or something like that, is what it got lowered to, and it got cut by like a quarter of a percent. So and that's pretty low. So like if I don't know if your grandparents, if they had a cash deposit account or things like that, they would make 6, 7, 8% on a cash deposit, and that's just not it these days. So that's not the case. So the banks that have enough money to go ahead, or more money than the requirement that the federal government goes ahead and requires them to have on cash deposit, they earn an interest rate of about 1.88% or whatever it is that the Federal Reserve goes ahead and pays to the banks. So what happens is whenever the interest rates go ahead and come down, right? So whenever they come down, the banks aren't earning that much money off of that money sitting there, sitting in that cash reserves. So the banks aren't making money off of the money just sitting there because they're not earning the interest rate anymore. So and the Federal Reserve, the Fed, will go ahead and do this on purpose. And so the reason being is then they'll go ahead and get the banks to go ahead and lower their own interest rates for like home mortgage, um, and auto financing, and so credit cards, HELOC, which is home equity lines of credit, things like that. All those interest rates for those types of loans will go ahead and go down. So the government does this on purpose because they know that right now we're overextended on a recession period. So we've been going up as far as on the market since 2008, 2009. When we had the market crash, we've had over 10 years of the market just going up without it really giving us another recession or a good pullback to go ahead and reset. So we're way overdue for that, and it's definitely about time for it. So the government is trying to go ahead and keep incentivize the banks and try to stimulate the economy. And this is what this does here is by lowering these rates, then the consumers go ahead and have lower rates, and they wind up happy here because they're able to go ahead and afford homes and buy that dream car, or if they could take lines of credit out on their home to do repairs, things like that. So then in turn there's more free money out there flowing to contractors and other people, and it creates some jobs and things like that. It just stimulates the economy when there's lower interest rates because the banks are willing to go ahead and approve more loans for consumers at lower rates. So it's a win-win-win for almost everyone, and that's how they go ahead and they stimulate the economy from going ahead and going into another recession. So without going into too much politics or anything like that, like I don't care what your political views are or what have you. I just want to go ahead and give the facts on it. We have election coming up next year. If you haven't looked into the news, President Trump is really pushing on the Federal Reserve to go ahead and keep lowering interest rates and even go into negative interest rates, to where if the banks have money on hand overnight, then they would go ahead and owe money to the federal government for having money on hand instead of giving it out as well, to be able to finance on loans and things like that to lend. So I personally believe, in my opinion, that at least for the sake of the election and everything, they will go ahead and keep doing this, where they keep lowering the rates a little by little, or keeping them around the same, so that the economy goes ahead and stays about where it's at, and then we go ahead and we could go ahead and enjoy better rates on houses, cars and things like that. And then pretty much then it's whoever's problem is the next president. So it'll be the next president's problem to go ahead and solve this, because this is just a band-aid. So this is just a band-aid right now. This isn't a permanent solution. It's not sustainable for a very long time. There is going to be a recession. It's not a matter of if, it's a matter of when it's going to go ahead and happen. And this is just a band-aid right now. So I found it pretty interesting. I wanted to go ahead and go over it. So that the Federal Reserve goes ahead and adjusts rates either up or down, and then so it is census that advises the banks, if they go ahead and if they're earning less interest from the federal government, to go ahead and lower their interest rates on loans for the consumer, and they go ahead and approve more loans. So it's a win-win for everyone, and it's pretty cool. So if you want to go buy a house or buy a car or anything right now, now's the time to go ahead and do it. Also, keep in mind, that with the recession coming, it's a huge opportunity, for houses and things like that. We don't know what the rates will be at that time, but obviously, the prices of real estate will be a lot less. And if you want investment properties or even your own property, that's the time to go ahead and buy, is when no one prepared and saved money for that time when no one had money to go ahead and spend. So I know some people that in 2008, 2009 got awesome deals on houses they wouldn't have been able to afford otherwise, if they didn't go ahead and buy during that time, because the real estate was so cheap. So pretty awesome, guys, just to go ahead and keep in mind, to go ahead and go over it. But I want to go over, so just a quick recap. So the Federal Reserve lowered rates, so the banks are not making as much interest on the money that they have on hand with the Federal Reserve every night. So the banks are not incentivized to go ahead and keep more money with them. They'll go ahead and start lending out more money to the consumers, to their clients, and for mortgages, things like that. And then it goes ahead and makes it to where it's easier to get credit cards, things like that, and it stimulates the economy. That money is going to go ahead and be out there floating around getting spent. So pretty awesome for the time being right now. For the next Christmas season's right around the corner. you know, you have your Christmas shopping, things like that. If you need a, you know, some type of loan or what have you, all the way up until the election of next year, I see that this is going to go ahead and be the case. So, pretty cool stuff. And I just want to, you know, kind of different format in the video that I wanted to go ahead and go over. But yeah, so just something to go ahead and keep in mind. But you guys have a great rest of your night. See you later.